Hello. 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 Hello.
Hello. Hello.
Hello. Can you hear me?
Yes.
Okay. I'm glad you can hear me.
What up? What up?
Good evening, Crash.
How's it going, brother?
Great, dude. How about yourself?
Not too bad. Not doing too much in the market these days except for watching, but
Well, it's a good time to be a watcher, honestly.
oh yeah, I'm very happy that I'm just a watcher these
Yeah.
days.
I mean, I will say things have gotten a little more exciting in the last, at least today, but it's still a short week. You're not going to miss out on much.
How's very good. Tostie? Oh, great.
Looking very good.
Nice,
Looking
nice
very good.
reversal, dude. You hammer that thing again? I would have
Hell
hit that.
no,
I
dude.
would have hit. Yeah, dude. Why couldn't you tell me like that it was actually at a buy zone, not telling me to buy at 8?
No, I didn't buy it at 8. I bought it at 6:30 or something.
Dang, I wish I had you. Did I never make you a chart for this?
No, make one. I mean, I posted it in my tab too. It's all
Yeah,
documented.
but bro, we got the inside information in the DMs that aren't in the tab too.
What?
That,
No, no, no. There was nothing
that,
that no, there was nothing that went wrong on this one.
other than the 60% sell-off highs.
Well, I didn't hold for that long.
Crash like that one. Crash unmuted his mic just to laugh at that one.
I really
I
did.
didn't
See, I really did. I was gonna say something, but all I could get out was a laugh.
I did not hold it that long. This one, this one's a separate conversation. A good exit. Oh, oh. The exit alone looks pretty sick.
Yeah, it's only down another 50% from there.
Good, nice sell. That's a really nice sell. I mean, dude, if we're being honest with ourselves, that's a great sell.
Dude, in this whole time, this is when me and Toasty first met. Yeah, look at this.
No,
Yeah,
I did not
January.
buy there. Nope, you're wrong. Didn't
Well,
buy there.
January, February 2021, you know?
No,
This is
I
where
bought the
Toasty and
top
I
of
first met.
that first big green candle. Well, actually, I didn't even buy it. It got a, well, I mean, I bought it, but
This one. Well, all
I,
I know is as this was happening, I kept telling him sell. And he didn't listen. And then when he finally listened, he was like, "Hey, maybe this river guy isn't too dumb." Oh, dude, we
yeah.
got we got 1K here from the bar. Love to see it.
Hey, River,
How's it going?
going well. You see what IWM did today?
Yeah, I did. I know. I asked you about it this morning, but in typical you fashion, you were out of here. Like your day was done 15 minutes in the day. Look at
Well,
that thing now.
yeah, I caught it right there at the 248, that 240 level.
Yeah, that
Yeah.
was that was money.
Uh,
That one was money. And yeah, we talked that. We said that 240 rate comes, it's gonna go, but I did not expect it to run $5 or whatever today. That was
It's kind of crazy how much relative strength it's had too. I mean, it's outperformed the Qs and the S&P the last 3 days.
Yeah, but it's still just,
It's closed right at the 2021 all-time highs, couple cents above it actually.
yeah, it's just fighting it still.
Yeah, hasn't really gone anywhere, but maybe this is a
Dude,
feel it
and then
move.
the other funny one to me is RSP. This thing's like,
Yeah, that's outperformed today as well.
yeah, it outperformed finally. Still definitely on that underperform end of things. I guess maybe after this bounce, it's probably looking okay. 6% on the year. Yeah, it was not looking so good. 2% on the year here a few days ago, that's for sure.
No.
But yeah,
QQEW too also looked good today.
good to see some buy-in there. We want to see a little bit of breadth expansion because the market, as we've seen, has had virtually no breadth expansion since June. So other than our little shit stock rally into summer. Okay, welcome everybody. How we doing? We'll give this a few more minutes. I saw we got Shark in here. We got Toasty. We got 1K. I'll make another post here in a second. But for tonight, like I said, a little bit different, where this is kind of trading psychology, Q&A. Really ask us whatever you want. You guys know I always try to get in some sort of Q&A or trading psychology lecture anytime we have, crazy movement in the market. Just because we see it all the time, people's like, any logical thought goes out the window when the market sells. And so, I mean, we could basically look at this chart. I can guarantee you I did a trading psychology or Q&A right around here, because when this type of stuff happens, people start making bad decisions. When this type of stuff happens, people start making bad decisions. Any of these big drops, you can pretty well guarantee that I've tried to do some sort of trading psychology or something like that lecture. So I was already doing one this week, so we're stealing Toastie's day from him. Thank you for that. Shark had mentioned here last week sometime that felt like it was a good time for trading psychology stuff. I'm sure for similar reasons that I had. So that's what we're gonna do tonight. I'll make another post. Toasty Shark 1K. Any of you guys want to say anything? Like I said, pretty open tonight for what we talk about.
No, I mean, I think you covered it well. And I'll let you be in the driver's seat and just chime in where I can. But yeah, I mean, you hit the nail right on the head. I couldn't have said it any better, so I won't even try.
No, definitely. I think it's important to get these in, especially during these volatile times. I mean, these are the moments when money's made. Obviously, you see the market as a swing trader making these moves, and some days you lose a lot of money, and some days you get shaken up. But you got to understand that with the philosophy I've been teaching and the bottom bounces and the value fishing we do, um, this is what we wait for to actually have some of our best months. But that doesn't happen without the composure and the training psychology. So it's a great time to do this.
Exactly, exactly. Yeah, and Shark, that's something, I'm gonna use you as the example. So I got another post sent. And we can just get into talking. And that was something I wanted to bring up because you and I are two people that we look for knives to buy. We look for explosions to short. We look for those big inflection points in the market. And I don't know when you made the post. I know you made it, I think it was sometime last week. I mean, knowing you, it was 4 days ago. You said, I am super bullish. Probably on this big red day, maybe the next day, but somewhere in the last, 3, 4 days, you said something about being super bullish. I doubt if there was anybody in OOT that agreed with you at that point. And that's trading psychology to a T. For anybody who's not in pro, whatever, doesn't matter, but we talk in there, we talk on trade floor. It's almost all trading talk, things like that. And so what I had mentioned to people in pro, sometime, I don't know, somewhere back here, I had mentioned to them that my downside target was going to be 652. Why do I have a downside target of 652? Well, because the market got absolutely clobbered down to there. We basically never visited again. It made sense for a downside target. I didn't love that it came on a $20 sell day, but people always forget this. they start letting their emotions dictate their trading. And, I think Shark is one of the best people that there is that does not let emotions dictate his trading. What I teach all of you, we did trading plans last night. What I always teach is when you enter, nothing happens between your stop out and your take profit. It is just noise. As long as the trade plan is intact, then you stick with your plan. Shark is the undisputed master of sticking with his plan. And so you guys know with me, we hit our 652. I mentioned the target was met. We've been kind of looking long all week. Of course, we haven't capitalized on it quite as much as we would have liked to, or at least I haven't, but that is trading psychology. We need to look at the charts. You guys know that I always try to bring things back to the charts. I'm not trying to tell you to pore over them and obsess over the charts and look at them all day, every day. In fact, I think when the markets close, most people would be better off just turning those things off and coming back tomorrow. And so charts are one of the best things to show trading psychology. And I guess I can get all this stuff off of here. Because they make it pretty obvious. And I don't mean to speak for Shark or anything like that, but he's like me. He spends a lot of time on longer time frames to build his opinions. You don't really need a level on the chart. You look right here, you look right here, you look right here. And when the market comes back to there, you kind of want to assume that it's going to do something. Maybe it's going to bounce, maybe it's going to break down, but this is all trading psychology. And so what I really wanted to talk about today was just emotions. And I'm hoping Shark can maybe talk a little bit about his emotions while trading. Toasty, 1K, all of you guys, things that affect you, things that don't affect you. Do you use the charts to tell you, am I right? Am I wrong? What do you guys do to control emotions? Especially in markets that are, seeing heavy selling. When do you start to think about getting long or seeing extreme buying? When do you maybe consider shorting? How do your emotions come into your trading? And so that's what I want to talk about tonight. If you guys don't want to talk about that, whatever, we can talk about whatever you want. But we'll have plenty of time for questions, everything like that. But again, Shark, Testy, 1K, anybody, what's your most important piece of trading psychology regarding your emotions? If you got it, if you can think of one.
Yeah, sure. I mean, just to drop a few thoughts. I mean, these are things kind of this went over as I grew with time. Like you guys know, I mean, to answer the question, as far as having a day job or full-time trading, I mean, my only source of income has been trading for like the past 6 years. So it's one of those things where I'll take it serious, and these are the most important lectures to me because I know if you guys master this and know nothing else, you'll probably be a good trader. And people that will hit you with every term or every technical statistic or anything, but don't have their trading psychology mastered, they're probably not profitable and they're due to blow up their accounts. But I mean, like River says, I mean, most traders they don't blow up because they're wrong. It's just the fact that they refuse to admit they're wrong. And yeah, during these market pyramids, I mean, look at these drawdowns on the candles you're showing. I mean, do y'all remember these drawdowns? They don't erase fundamentals, but they do expose emotions. So all these little things you see in the market, these liquidations, and even in crypto, it doesn't change the long term thesis. It's not about being like blindly optimistic either. It's just that panic is temporary. Like the value and the thesis you put behind your trades, I mean that's permanent. So you gotta look at them as opportunities and value fishing, whatever you want to call it, these bottom bounces. It's become my favorite way to trade because one, we're playing the mean reversions, and two, we're getting more value for our trades every time. And for the question about this, like when your stocks or your option, your medical down 75% and you sold and it came back in 2 days. The thing about controlling that and stop losses, I've been pretty big on however you trade, you stick to the way you trade. So me personally, I don't use stop losses, but I do enter every one of my trades with a trade plan. So to look at your option price and just cut it because it dropped, to me, that's not really a trade plan. And for a longer swing trade, it's like some of our February and March calls, there's a good chance that we'll see some red first. Obviously, it's not ideal. Me and River joke about this all the time that people act like their play is negative on purpose when I think it's hilarious every time he texts me. No,
No.
ideally, if we timed it better, it wouldn't be.
Yeah.
But I mean, managing your emotions on the trade and sticking to the thesis, there's a lot of opportunity in that. So, really mastering this is going to be the biggest thing I would say.
And I like that. Like, I mean, just to expand on that a little bit, that what Shark is saying here is that, we all want to be right all the time. People have a lot of trouble admitting when they're wrong. I think that's a huge thing with emotions. And something that we see it in OOT all the time. Somebody will be in a trade and they're somehow getting like more confident and more optimistic. And they're like, oh yeah, this thing's dumping. I knew it was going to dump. Well, then why are you in calls? If you were so positive it was going to dump, why are you in calls? And this weird overconfidence that can be built when red. Don't get me wrong, we all go red on trades. I've alerted trades that have gone plenty red. Shark has, Tostie has, 1K. We have all alerted trades that didn't go as planned. That's trading. We'll happily tell you, hey, this isn't going as planned. We all want to get into swing trades and have the massive gap up in our direction the next day. That's unfortunately just not real. However, don't start adjusting that trade plan just because you're worried. If you bought puts at 665 or 660, hoping we're going to dump below 660, and you start saying, oh, I knew this bounce was coming, but we'll dump. That's not that's not real trading. That's not proper trading. Like, oh, I knew we bounced to resistance. Well, then why didn't you wait for resistance? And so, what Shark is saying is build your plan, follow your plan, don't start adjusting your plan. The person who's asking about their medicals or whatever, you were down 75%. The only you shouldn't have been holding that trade likely. I'm willing to bet you didn't really have a planned stop in all that whole equation. You have to ignore days like this. You have to ignore days like this. The S&P is not going to sell $20 in a day. The S&P is not always going to rip back $20 in 3 days. These are kind of, they're fun times. They're profitable times in the market, but this is what we're talking about. Don't let them change your emotions. If your trade goes minus 75% and it comes back to break even, I'm happy for you. Super stoked you made money. Super stoked you didn't lose money. However, wasn't the best trade. You have to think that if you're always holding your trades down 75% and then it comes back and you sell for 20%, we'll say 25% for easy math, you had 3 risk, 1 reward. That's not going to build long-term longevity in the market. If that's how all of your trades are going, then you very, very likely need to work a little bit on entry. Like I said, we all have trades that go against us. It happens sometimes. It's about controlling them when they do happen. And
Hey,
so,
River,
yeah.
check DMs real quick in Discord. It's very on topic. If you want to share that screenshot real quick.
Oh yeah. Oh yeah. Let me give me 1 second. How do I do this? I think I do it like this. Uh, Whoa, you were setting me up for failure right there, bud. How dare you? So
What?
yeah, your name just almost got shared. So this is a great table. This is what I'm talking about right here. Your thing goes down 50%, you now need 100% gain to be break even. This is something that I talk about all the time. You're down 70%, you now need a 233% gain from that price to be break even. This goes back to, I talk about it a lot, Shark talks about it. Entry is very crucial in trading. We want to take the best possible entry that we can, but this chart right here shows exactly why we want to land in those situations as little as possible, because you have to ask yourself, how realistic is a 233% gain? Not very. If it was very easy to get 233% gains, everybody would be trading. You need 233% gain just to be break even. So this is the perfect example of why you don't ever want to hold those kinds of trades. You want to build your plan ahead of time. You want to understand your risk. I understand on meta, obviously, you aren't going to be running, $1 or $2 stops, but you were long on one of the weakest names in tech. Thing has been absolutely obliterated since that earnings. And it happened to just rally with the market. So you need to just ignore that trade and understand that it was, like I said a few days ago, find a put that didn't pay 1,000%. And like we say now after these last 3 days, find some swings that didn't pay 500, 1,000%. You're hard pressed not to. this isn't normal market. We all want to try to capitalize when this shows up. Of course, not all of us are gonna like stare down this behemoth and be like Shark and say, I am so bullish. We aren't telling you to do anything like that, but build those plans, follow those plans, and you'll start to find yourself having a lot more success.
Definitely. And just the last comment on those meta calls, because I mean, I read your thing. You had a plan, but you didn't follow it because of emotions. Obviously, I don't know exactly what you mapped out or how it went, but something someone told me, I think, a few maybe 2 or 3 years ago. Really good trader. He's huge on social media. I mean, you guys would know him, but he said drawdowns don't destroy traders, overreactions do. And I thought that was so well put because I mean, think of your plan. Like when these stocks are pulling back, um, sometimes I think of it as like a game. Like they really want to shake you, whether it fell under your stop and then it didn't fall under your stop and you panicked and you sold because it was dropping and you're losing money. No one wants to lose money. I mean, that'd be an overreaction to your plan, or whether you ignored the stop and then you decided to cut at the bottom. Well, I mean, you made your bed, now you gotta lie in it type of thing. But when he shows those percentages of what you need to get back to break even, one thing you got to add on top of that is that's for equity. For options, it's even worse because it's a losing game every single day. So you have to
Yeah,
be even more surgical. Like we really don't have the time to wait for, oh, it'll come back in the long term. Like on that
exactly.
big
And
bird
like,
candle. Go ahead, River.
and I was just gonna say, I love it. Thank you for bringing that up because yeah, this is 100% gain. But what you have to remember is, we'll just use SPY again. Your SPY puts that you bought at 660 that are minus 50%, they ain't gonna be break even at 660. On the equity. That's what Shark is saying here. Unless maybe you got months of time, you might find yourself close to break even. But due to how options work and how options are priced, just because you entered at 660 does not mean you're going to be break even at 660. So you need the 100% move on the option to be break even. You need an even bigger move in your direction on the equity to actually get that option back to break even. And so that's why, I mean, you guys, I'll use myself as the example because, oh yeah, love it. Right here, this blue circle right here, this is where I entered T calls for a swing, looking for that move into 30 on some January contracts. And this was back in September or whatever it was. Well, you can see how that went for me. I of course eventually had to eat them, but even if this thing got me back up here to 28, 29 by December, I would be down 50% if I got that whole move back up. So there is so much more you need to think about when you're building your plan. Otherwise, you can wind yourself in a really sticky situation. And like I said, I wanted to use myself as the example. Happens to all of us. Like if trades get away from us. That's all there is to it. Sometimes you get hammered by news. You guys know I trade AT&T a lot. It had this couple years where every couple months they're recycling this same news story that just clobbers it. And I got on the wrong side of it. And that plays into two sides of this. Couple times I thought it was an overreaction. So I stuck with the trade and it came back for me. It got really ugly in between, but it came back for me. Third time, I'm assuming overreaction, this trade will come back. It didn't come back. I got wrecked. So, you always have to play the charts. You always have to ask yourself, is this an overreaction? Something that I've been teaching a lot lately. And we see it in OOT literally every single day. People have an unbelievable ability to buy when they should be selling and sell when they should be buying. I'm not telling you to average down on your trades or anything like that, but what I've been recommending to people and what I recommend to a lot of people is, when you build your plan, you need to know three things: entry, stop out, take profit. You have to know those things before you enter. I'm not saying you need to put a hard stop on your trade, but you need to know, where does my trade plan fail? And what I encourage people to do is look for an entry as close to your stop out as you can get. You'll start finding yourself having a lot more success when the trades do go your way, and you will find yourself losing a lot less when they don't go your way. And so, always remember, like Shark said, just because you need that 50% return on the option to be break even, you're going to need a lot more out of the chart for that.
And I want to build on what you just said about the entry to the stop out. I don't know if Tostie or River and you guys remember, but I sent one of my biggest like trading strategies, or how you guys know how I do play these bottom bounces, is I'll take my initial entry where I think, I mean, this confluence, and I'm pretty sure this is where I expect the stock to go and the stock to bounce, and that's how I play it. And then just above where I will say this trade is invalidated, we always average down. So when people say it's crazy, I got in at the average and now I'm up 200%, 300%. I'm like, if that trade went any more south, we were out of there. I mean, right above that invalidation level is where
Yep.
I think it's a risk-free entry, and that's one of the things where I build positions. And if it gets there, great, I could get in that position at a favorable price. And if it doesn't, great, then we made money. I think that's. I mean, I wasn't planning on talking about that specific strategy today, but that is like something River just mentioned that I think should be heavily
Yeah.
considered by everyone. I mean, it's
Well, and that's something that I mean, I think it's great, and I'm happy you brought it up because you and I, it's funny because we trade so similar and so different at the same time. But when we're swing trading, there's room. There's always room to add more. Like in my opinion, you have to leave room to add more. Because you might be taking an early entry. I can actually use myself on T because I hit a nice T swing a couple of days ago. And I don't remember. I think it was somewhere right around here, sometime last week. So bought some tea, thought I was holding 25.50, got the knife down. Well, I look at the support. I'm right down here to 25.06, 25.17. That's my big zone. I knew maybe I was buying early. I thought we were getting some upside, so I knew maybe I was buying early. Well, now I got to add my other half a position. And what Shark is discussing, and we can just use this one, it's nice. I added right here in the 25.10 zone, whatever it was. Well, my stop is 25.06. So I get to now have a bigger position with substantially less risk than just getting in there. So I always leave room to add. Everybody, I think, should always leave room to add on a swing trade, because a better and a slightly better entry might come. The double-edged sword of that is, will you stop out when you need to? And a lot of people won't take the stop out. That's where the risk comes. So where we can happily add to a trade because we know, oh, we get under 25, I'm out of this trade. That's the plan. So when the plan doesn't work, then we exit. That's where I think a lot of people would find a lot more success in swing trading, is leaving some room to add. You have to remember, you know, worst case scenario is you get stopped out. Other worst case scenario is the trade runs before you have a full position, and who cares, I mean, it sucks. You'll wish you had your full position, but it doesn't matter. You leave yourself a little bit of room. If the ad comes or the ad doesn't come, then you either make money or lose less money. So it's really the win-win situation by leaving that room. I know people know OT love to just say, okay, I'm all in. But most of the time, that's just not going to be your best idea, that's for sure.
yeah, definitely. And then this comes back to the same thing we just mentioned about having the trade plan. Like I know I'm in some March surf and then some February like TLT and Mara calls, and I'm a bit red on them, but I saved that room. I mean, whoa, in my eyes, there was no chance I was gonna enter this TLT position for months and months out. We're talking 4 or 5 months out. I'm fishing value, and in my eyes, I'm no fool to enter off a weekly chart and think, oh, let me just go all in, knowing I just bottom ticked in the price for the next 5 months. I wish that was the case. I would be flying private jets everywhere and driving
Yeah.
around in my yacht. But I mean,
And like, yeah, they aren't all going to be the Johnson and Johnson buy at 177 and it runs 15% on. I don't remember what your actual entry was. I just remember it was perfect and never saw red. They aren't all going to be like that. Mara is a great example, and a few of us reviewing this a little bit different. There's some very obvious places to try to buy Mara. 12, 11, and 970. You should be a buyer down here. You can take you can take your little bit early entry here, but we know that this zone down here, and don't get me wrong, on something like Mara, that $2 is 20%, it is kind of a big zone. You leave yourself a little bit of room, maybe the double bottom at that 970 sets up, and if you've left room, you're good to go. And you can write it without panic. You guys know that I teach all the time. Just because you have time doesn't mean you should just diamond hand a trade. As long as your trade plan is working, you hold the trade. And it all goes back to that. Anything between entry, stop out, and take profit is noise. Those are the only three things that you should care about when you're in a trade. And like Shark says, I don't know that I've ever seen Shark send like a 5 minute chart in my life, but I've seen a lot of daily charts from him. I've seen a lot of weekly charts from him. So if you are building your plan on those longer time frames, you stick to your plan on those longer time frames. You don't take your stops on a swing because a 5 minute candle closed somewhere. You let the day tell you what happens. And I'm sure you guys have heard me say it before. Big money doesn't care about all this intraday movement. Where'd we start? Where'd we stop? That's what big money cares about. That's what we should care about if you're trying to be a swing trader.
100%. Like these plays I'm entering, I mean, weeks, months out. If I enter on the weekly chart, I can guarantee you I'm not taking profit or cutting or even probably even looking at the position, what happens throughout the week. I mean, the next candle hasn't even printed yet.
Yep.
And I mean, going back to the overreactions, I think the FCX, if you can pull that one up, River, that'd be good. I remember our first time entering.
Like
Yeah,
this.
yeah. So like things like that. I mean, like that's another overreaction where
Yeah.
it just caused panic. And I mean, our eyes. I was looking at the news. It was kind of a fundamental play, and then based off that level, it's just like, come on, like.
And again, yeah, I mean, I didn't take this one. If you guys don't know, I'm notoriously bad luck for shark trades, so I tend to sit those out for you guys. But look at this trade. I mean, you buy at 35, and if we really crack 33, fine, get out. So you got about $2 risk, but this thing just crushed $15 or whatever it is in a day, $10 in 2 days. So you're gonna risk three to maybe get a run back up to 10, a $10 run up, worth it every single time. That's a trade you take every single time. And again, not all of us can be like Shark and look at this. I mean, I love to buy a knife. Anybody who's traded in voice chat with me knows I love buying a knife. So we aren't telling you guys to just look at giant red candles and be like, I'm buying. But you're kind of saying to yourself, there is exactly zero reason for these gold and copper things to be getting clobbered when gold is just flying all day, every day, and they're going to dump it on some random news to strong support. You look to be a buyer.
100%. And I mean, these are the plays we look for. Like, and when it goes back to the position sizing, like some like those TLTs, build in slow. But Rick Tech Robotics, I know when I trimmed some of my position today, I mentioned I was in full right away because I
Yeah.
knew it was a quicker bounce play. I wasn't planning on holding this for weeks on end, and
No.
it's one of those where the trade, nothing we're saying is set in stone. I think what it all comes back to is whatever you planned on doing or whatever makes sense for your trade. If you stick to that and ignore the noise, and whoever mentioned the price ladder when he said he doesn't even look at his contract price, I don't even hate that. I mean, today I sold some SPY calls I bought a few days ago for $200. I just sold them for 1,100 each, and I didn't even know they're 1,100. I was just looking at the chart.
Yeah.
So
Charts up and charts where it could pull back. So you
yeah,
see
I'm
some of
saying
those
that.
up. Yeah.
I
That's even
look.
like, so I got to point this out just because, most of you have been in lectures with me or in voice chats. So you guys know how I chart. Shark and I chart pretty similar, trade similar, we like, I do all my analysis on the daily time frames, like the same thing he's looking for, sells to consolidations at big levels with, relatively little risk and potentially a lot of reward. It's literally exactly what we look for on short time frames every single day. And this is just another perfect example. I mean, don't get me wrong, it's a shit stock, but dumps down to the buy zone. I mean, here's your risk. Like if you're buying anywhere down in this 275 3 zone, you're really risking 235. So you got what,
Yeah,
60 cents of risk on there, not even 40 cents of risk on there. And you're looking for potentially a dollar move up. And then, we know how these, that is the fun side of shit stocks is when they go up, they tend to go up a lot. So you look for the buys down here. You don't be the people buying, oh, like, look, this thing's ran 500%. Seven seems like a good entry. Don't be that person. Be this person. That's when Shark's talking about looking for value dip buys. This is what he means. At least, I mean, how I view it when he says that. This is what I feel he means.
100%. I mean, some of the ones I mentioned, I think one at the top of my watch list is PayPal on the weekly. It's one of those where I mean now it's coming back into a multi-year demand zone. I mean, it's held for, like we said, that 57, 60 zone.
Yeah. I mean, and you can see like,
Yeah,
and you'll see this, like it's funny, because you guys have all seen me chart. You've also like you've got to talk to Shark a little bit now. Do you notice how all of his setups look the exact same? Like,
exactly.
like that's what we try to teach you guys all the time is that everybody wants the fanciest and the new and the, I want this algo. Oh, I'm studying this person. Just slap some lines at the chart, figure out where other people buy and buy. Like, do you notice that, like I said, like here's the PayPal. Okay, big clobber down to what we know is strong support with very minimal risk, few bucks risk, and potential 10, 12 bucks upside. You take the buy. RR. You sell down, very little risk, a lot of potential upside. You take the buy, almost all of Shark's setups will look like this. What was that other one? Is it FCX? Yeah. FCX, you get clobbered down, strong support, potential big upside. You take the buy. Um, don't be the chasers. Don't be the person chasing the next best thing. Don't be the oh, I forgot. I got my bad one. Don't look at NBIS up 700% and start buying. Like let these things pull back. You guys can see I mentioned this even in pro, and so I have my level on here. I mentioned 85 when we were way up here. I said 85 is the place to buy. It is the first place in months that buying NBIS to me makes sense. And so of course when the whole market got cratered, made sense. But now it filled the gap. Our buy at 85, your risk was $9. We know how this thing can move. I mean, it technically did 15 from the first time it hit it. We know how this thing can move. These are where you buy. You don't buy up here. You don't buy the first little pullbacks. You let value develop and figure out where other people want to buy, and you buy. Nick, I
The-
do love the one you brought up, just because, like, I want to buy this. I haven't. I want to buy TTD. It was a company that I was very bullish on. My shares that went through this, we're not happy, I mean, we got some shares, very beginning of the year. I had like five left, and gave back all of the gains on all those last five that I had or whatever. I want to buy TTD. It's one that it just keeps on selling. I mean, look, we're down. What are we down to? We're down to what, 38, 39. I mean, really is the last line of defense. It is exactly like what we're talking about, but it is one that is also, man, that thing just cannot find a buyer to save its life. Love to buy though. But yeah, I mean, you're looking for the right things, but you're right, it does just keep on dying.
Definitely. It's I think when we played DraftKings, I was mentioning when the predictions markets came out, I was watching a leak for like a month or a month and a half. It's on my watch list. I was like, it'll come.
Oh
And
yeah.
it hit that level and it bounced, and it was one of those trades where it's like from beginning to end, like it was just execution off that level. And it's not the most glorious trades. Like, yeah, sometimes it'd be fun to trade NBIS and be a part of the chatter and maybe a trade for or on social medias, or we're talking about getting rich. But like I said, it's not glorious. It's not the most fun thing ever. Sometimes it just feels really systematic, but I can tell you guys, 6 years. I mean, this strategy, how simple it looks, and how easy it is when paired with the right psychology. Like, it really did change my life, and I think that's why me and River are just hounding these principles like over and over. We're very similar in that way. And
Yeah.
yeah, to answer that question, to know when I'm entering like full size, typically I believe I say I'm entering with half and half. I don't usually go above two ads. I mean, maybe if it was a long position out there, but if there's a third ad, that's you're starting to push that stubborn line.
Yeah. At a certain point, yeah. Because that is the other thing I teach. You guys have all seen me share my favorite thing. I'll find it for us real quick. Um, you know, adding to a trade that adding to a trade that is still valid is great. That's just fine. Um, Adding to a losing trade is in fact not good at all. And so one of my And that's what Chuck's talking about here, At a certain point, you're just kind of being stubborn. So one of my favorite traders ever is this guy, Paul Tudor Jones. Um, and this is, let's see, what do we got here? Oh, yeah, there we go. So this is what he has, and this is what hangs on his wall. Losers average losers. There is a very fine line between adding to a trade that is still perfectly intact and adding to a trade that you were just dead wrong on. That's like, some of these shit stocks that we're seeing. I'm sorry that I keep using that terminology, but you're no revenue, maybe have some deals for things that like aren't really happening and nothing's happened yet, but they got like some handshake deals. What's one I can think of? Oh, this one. I mean, maybe it's a great company, but when this thing keeps dumping 35% on you, you want to be buying at reasonable places. You don't want to be buying up here. I understand it puts in these big moves. You want to be buying in value and you don't want to be averaging down trades. Like I'm sorry if you held longs from here to here, you just held a 36% stock move against you. And that's a trade that should have been exited, in my opinion. Could some of this be overreaction? Absolutely. But at a certain point, you have to look at the chart and you have to say to yourself, am I wrong? Am I just wrong on this trade? Which I think is, I think that's where a lot of people struggle. Oh, KP, so great question.
River, you think Nike fits that criteria? That swing with a month or two, it's already like at the 5 year low. Your stop would be what at 60 or 55,
So I was going to mute you,
or
Norvin,
like a
but I kind
Orphan.
of like that. But here's my issue with Nike. You can see I trade Nike. You can see my chart here. I've been trying to catch the reversal on Nike for 3 years now. It's not coming. Yeah, it's at some lows. We were lower earlier this year. But I'm just, I'm not ready. I'm not ready for it. I'm not personally not ready for it. I mean, you can try, for the bounces. But man, Nike has been value trap for years now. So KP, I see your question, FCX. So like we said, you don't always know what's going to happen. And your question is, you're at 50% the next day. Should you have trimmed? Yes. You 50%ed your money in the day, if in a day. If you have more than one, you should absolutely be trimming. And again, it goes another 50% the next day. You should absolutely be trimming some off. Of course, sometimes these things are going to turn around and work for you really, really good in a hurry, but we're here to make money. Um, Nobody is going to care or remember if you made 100% on a trade or 20% on a trade in a week. All that should ever matter to you is booking your profits. We are here to have more than yesterday. If we have more than yesterday, technically speaking, we have accomplished our goal. Was this thing setting up a nice reversal? Is there ways you could use the price action to actually manage that trade? For sure. However, you hit a 50% trade overnight, you trim it. That's what you have to do. Especially on this one. I don't remember exactly where you guys bought. You have to trim right here. You have to trim where these two candles meet. The chart tells you have to trim. Does it absolutely rip over it the next day? For sure. But you have to trim because you ripped into resistance. We can even see rejected back below it that next day. You have to trim.
Yeah, and I mean, that's a big point, River. And part of the reason why I love swing trading is I feel like the opportunity, like if you're day trading and like scalping all day, sometimes you might feel extremely pressured to have these winners or make this amount of money because you're investing a lot of time into it. But for at least the way I trade, I mean, I think it was yesterday. It was an extremely busy day. Barely got on to see the market, or barely spent a very little time. So the fact that I ended up with more money today than yesterday, while still being able to, if you guys have 9 to 5s or chase your passion or do your hobbies, like remember why we're doing this. And then the day, like we're making money from the comfort of our own environment. There's no boss. It's just us trying to improve our lives. We're trying to make some money off of these things. So when the market hands you money, it's just as simple as taking it. Like really.
And we get asked all the time, goals and things like that. And I understand for a smaller port, this doesn't sound like, anything great, but the benchmark, the market, what do hedge funds, what does everybody want to do? They want to make 10% on their money in a year. Don't get me wrong, I understand it's hundreds of millions or billions of dollars or whatever it might be. They want to make 10% on their money in a year. Shark alerts a swing trade and hands you 50% on your money overnight. You take that money. There's this weird greed that occurs with people. And, when you say, should I hold for more? To me, those are famous last words, should I hold for more? Or, the meme, and it hits me. You guys hear it happening to me in voice chat because I like to, prove I'm in trades, blah, blah, blah. If it's good enough to screenshot, sell that thing. You guys have seen it happen to me in voice chat a bunch. I take a screenshot, and by the time my screenshot is taken, I've given back some gains. We're here to make money. We aren't here to prove anything to anybody. So going hunting for those home runs all the time and these big gains are, you know, um, it's not the move. That's not how you wind up with longevity in the market. Something, I mentioned to you guys, rarely do I enter sharks trades. I'm notoriously bad luck for all alerts. I've wrecked Tostie, I've wrecked 1K, I'm sure. I've wrecked Tilio, I've wrecked Shark, I've wrecked Grizz. So I don't take anybody's trades. However, when Shark alerts something, because we oftentimes look at the same things, I'm going to pull up that chart and I'm going to see what he's looking at, and I might take my own trade because we're going to be looking at them in similar ways. And you guys know me, I like short-term stuff. I mean, I swing all the time, but I don't love swing trading. I like day trading and scalping. So I might go look at the shark chart and trade it, but I'm going to trade it a little bit different. And that is one of the great things about Shark swing trades or good swing traders. And you guys have all heard me say it a million times. Shark is the best swing trader I know and that I have met. You guys ask me when I have questions or I want to talk trading, who do I go talk to? It's people like Shark, 1K, Toasty, Tilio. Those are the people that I talk to about trading. And so the great thing about shark swing trades, they often pay a few times. So yeah, trim your 50%. Maybe you get another entry. I can't tell you how many times Sharks had an alert riding that I've taken like 5 trades. Don't get me wrong, I always sell before the real move, don't get me wrong. But there's been a million times that Shark has said, oh yeah, I'm on this, I'll pull up the chart. I say, hey, I like that. And I'll take a trade. Like I said, you don't have anything to prove to anybody. Putting money in the bank is what you should be thinking about. And that's all that matters. And I see JT brought up something that I talk about all the time. And I mean, I kind of even just hinted at it. And I mean, Shark even, same thing. Nobody don't think in these dollar amounts, don't think in this kind of stuff. Think what the chart is showing you and think in percentage returns. I'll pick on Norvin because, he'll yell at me and he'll say things like, oh, River made $20 on a scalp. Yeah, and it was a 35% return in 4 minutes. Yes, think in percentages and think how much money, I guess the best way to put it, find me something else that I can put my money into, and in a few days of swinging, you'll hand me back 30, 40, 50%. I will stop trading right now and take it. There's nothing else that you can do that will give you that large of a percentage return on your money in that short of an amount of time. And so always think about, what is this doing for me? How much money is this make? Like how much money is this making me from how much money I used? And that's all that matters, find somebody that you can walk up to and say, hey, give me $100, I'll give you $150 back here in a couple days. Everybody's going to say yes. That's part of it. That's a 50% return on your money. That's what really matters. And that's what you see in these swing trades. You see those nice percentage returns, and then people just keep holding them and looking for more. When book some of that profit, look for another entry. Maybe the entry doesn't come, but you're still in the trade, so you're still making money. But you've put some in the bank. That is the most important part of trading, is money going to the bank.
100%. And I mean, this is like last thing I'll say because I know Tostie and Monkey are gonna want to share some thoughts. But like for even like Rig Tech Robotics, I mean, my target was 4, and I thought that could be even a conservative move just with the way the stock pulled back and how quickly it might mean revert back to at least a nice little bounce there. But when I'm looking at my account, and let's say I put a full position, let's say you had $10,000 in it right away, and now you're looking at $4,500 profit. Like, end of the day, like if I laid out $4,500 in cash on your desk and said, oh, if you just leave it here and don't touch it, it might become more, or I might take half tomorrow. Like we're here for a reason. Like it's like no one cares. Like in the year, I won't remember. I'll remember that one trade I hit. I mean, it happened a bunch of times. I can't even tell you them. Sometimes people say, remember your Starbucks trade or your Roku trade 600%. I'm like, not really. Like, I
No,
really
not
don't.
not really. Yeah, but it did happen. Yeah.
Yeah, so it's just one of those.
Let's be real here, dude. All anybody remembers is SOS. That's it. That's all anybody remembers, dude.
For better or worse, man. I'm still not sure if we're happy or sad about it, but I'm
Yeah.
happy, so I
Yeah.
guess that's what matters.
Okay, well, Toasty, 1K, what's up, you guys? Sorry, fucking mean Shark just been yapping, dude.
No, you guys are good, dude. I've just been listening and taking some notes while you guys talk and felt like it's been a productive conversation. Didn't want to interrupt. The one thing that I did want to do is kind of summarize what I found to be um, kind of the main theme surrounding your guys' conversation. And maybe this was obvious to some and maybe not to others, but I think the key point, that surrounds everything that Shark and River had just discussed is that every single piece of their advice was surrounding or involved having some kind of plan before you go into a trade. Whether it's River mentioning, your entry and exit and stop should be defined before you go into a trade, whether it's River talking about Shark's daily and weekly charts, all those things involve having a trade plan before you enter the trade. And the thing that I find most important too about averaging down is that very clearly when Shark plans to average down, and I'm sure River does the same. I just haven't seen it as intentional. That plan to average down is in place before the first entrance of a position is even taken. So it's not something that you just come up with when you're already red and you're like, oh shit, this isn't going so well for me. Maybe I'll buy some more and lower my cost. And unfortunately, that's just a coping mechanism for yourself to deal with the fact that your entry wasn't great and now you feel that averaging down might make it better. But in reality, you're more than likely adding to a loser at this point. So anyway, long story short, I think it's really fascinating that everything starts with a trade plan, and if you don't have that in place, you're basically doomed to fail. The other thing that I wanted to just bring back up that I found interesting is both River and Shark mentioned, there's a time and place to catch a falling knife, or a time and place to understand if something may or may not be an overreaction. And the thing that I just wanted to mention is that provide a little bit of perspective in the sense that these two guys, certainly have a significant amount of experience, more than probably everybody else in the room. And I'm sure there's somebody who's been doing this for a little longer, but understanding when the market is truly overreacting isn't as easy as just looking at a chart, seeing a big red candle, and saying, "Yep, this is definitely an overreaction because I say it is." Right? For example, if you're not in tune with maybe the news of the times, like maybe for an example like FCX, and not understanding that overall gold miners are moving higher due to significant demand in gold. We're in an inflationary cycle with the potential for further inflation, and gold is a safe haven asset. The Chinese central bank is purchasing gold, blah, blah, blah. If you don't have all that context, it's not so easy to look at, two massive red bars on FCX and say, yep, this is a buy, right? This is definitely a buy. Because for as many times as, you see names like FCX, there's probably 2 or 3 times as many where those big red bars are just the start of something more significant. So the point I'm trying to make is that, everybody shouldn't leave this lecture and think it's time for them to start looking at these big red bars. Yeah, CoreWeave's a great example, right? You see that first big red bar back in late June, mid-July, and you might think, oh, this is an overreaction, right? Like, I know it's an overreaction. And ever since then, it's been lower highs and lower lows. Um, so like I was saying, right, with FCX, that was a great example of one that worked out, and there's plenty of examples that haven't worked out so great. And being in tune with the fundamentals as to why that drop might be occurring and what the tailwinds of that company might be are really, really important. So the expectation shouldn't be for every single one of you to go out and find your favorite falling knife and your favorite shit company and buy it because River and Shark told you to. So
Yes, very good point, Toasty. And just real quick on that, knives to important parts, important spots. That's what you buy. You don't buy just a 1 day clobbering, you buy when you knife to a spot where other people have bought previously. I'm looking at CoreWeave right now. You guys have known me. I have hated on CoreWeave this entire time. I'm looking at CoreWeave right now. For the first time to me since June, this is offering a buy. What a nice little low risk buy right down here off of these previous highs. It's ultimately where the breakout really began. This is where you try. You know, some buyers have to be parked there. You don't buy all these knives on a no rep, no name Twitter favorite. You wait until a major spot comes. And when we look far left, this thing had no breaks until the top. So we want to say, okay, where did it go all gas? It went all gas at 65. That's where we want to be a buyer.
Yeah, that's a great thing to add too. And sorry, this is a little bit of a distraction, but I saw something in the chat that I wanted to respond to that just came up really quick. Somebody mentioned, is it important to focus on, just technical analysis? And my answer is always going to be no. River loves to make jokes about me not caring about anything fundamental, and to an extent, I really don't care too much about day-to-day fundamentals. I don't care, about these small data reports. I don't care about, what's happening on a day-to-day basis, but when there's big fundamental changes in the market, like for example, cutting cycle beginning of the Fed, or a massive fundamental change in a company, maybe they release a new product or issued significantly higher forward guidance for the following quarter or following year. Those are things that I personally think that everybody needs to be paying attention to, because things like that are what drives significant moves in a stock. And if you're a swing trader, you're not going to get a significant move just based off of technicals alone, right? Technicals alone can get you a move for 1 day, 2 days, 3 days, maybe even a week or a couple weeks. But long term, 3, 6, 9, 2 year, 3 year out moves, that's not going to happen because you found a bull flag on the weekly, right? That's going to be having there's going to be some fundamental impact that's driving a name like that higher. A great example of this right now is a name like Google, right? And you can see the parity between Google and NVIDIA, where now those TPUs, tensor processing units that are a competitor to potentially GPUs as AI processing chips, are driving Google significantly higher, and the awareness of that is driving Google significantly higher, where in the past that wasn't so much of a factor. And this has been, a 6+ month move in the making for Google, and it's not just because of River's rising wedge breakout right there. Obviously that's important to be aware of, but if you actually understand what the news on this name has been, that big gap day, I believe, was when Google Chrome remained under Google's control. And a lot of other these gaps are either related to earnings or headlines from that point forward. So,
Yep.
yeah,
That's exactly what
absolutely.
this was. And that's why
Yeah,
there's the blue circle right there, because we discussed this in a lecture way back when, saying, you see how Google's just sitting right at all-time highs, and then the news is what sends it.
right.
And
And that's a whole separate conversation that we could get into about names sometimes setting up before news, because somebody always knows, right? And there's people buying before that news comes out. But I don't want to get down that rabbit hole because we could talk about that for a whole nother couple hours.
and I
But
think
yeah,
I love what you're saying there, Toasty, too. And I think, there's some interesting things in the market, because we have always been winning asking about, how much should you study this? And fundamentals matter. The days of being a fundamental trader are dead, gone, rotting in the ground, and have been for 20 years. You can't go trade PE ratios. You can't go trade PB ratios. Those classic fundamental trader things, they don't work anymore. PLTR is a wonderful example. If fundamentals mattered like they used to, PLTR would be a $40 stock. That, like, it's overvalued at 40. Because of the vision, the story. Maybe the fundamentals don't back it up yet. Maybe they're saying, oh, we could have this growth over the next 10 years, but it's still really open-ended. Those types of fundamentals and only trading the old school fundamentals, that stuff's kind of gone. What Toasty is talking about is the kind of news-driven fundamentals where,
right.
we can use NBIS as the example.
Yeah,
It's
I was actually gonna ask you a question over that, River.
Hold on, Norvin. Hold on, Norvin. Let's get to the end here. So NBIS is a wonderful example. They're basically losing money. They're wildly overvalued, but somebody has agreed to give them $1 billion to rent some space from them for a building that they don't even own yet. They haven't even started construction yet. However, that's $1 billion going to a company that's, I think they're netting around 90 million a quarter. So it's a ton of money for them, especially with a weak book, but you need to pay. I don't want to say you need to pay attention to those because you're kind of mentioning another thing that I also think is a double-edged sword, that this is where something, me and Toasty we likely disagree on this. Going and digging through the whole market and looking for this stock and looking for, potential deals or these fundamental changes like Toasty's discussing, big guidance, those kinds of things, and trying to look at a million things is a failing strategy.
No, we don't disagree on
Yeah,
that.
yeah, okay, good, nice. Yeah, like Toasty will go find Very and trade Very. I would never, because I would never
Okay,
find a
well,
stock like that. I'm not
fundamentals are shit on that
and
company.
but you found, you go digging. Well, the fundamentals are shit on all these names that are running, but you go digging and looking for those things. And so my answer to you is you need to know a little bit. We're lucky on TOS. Google, what's the news? Click the live news. If I go back here somewhere, it's saying we're competing with NVIDIA. I don't remember what it is.
Yeah,
And
Nvidia, yeah, it's not that
that's
hard.
what we need to know. How deep do you need to dig? Not very deep. You guys see me share the news things all of the time. I'm just getting them right here. Like, oh, look at Google got an upgrade. There's my news. You don't need to deep dive, but find yourself your nice basket of stocks you like to trade and keep your ear to the ground on the news and any fundamental changes for them. And I would say that is very important. It's like Toasty started all of this with, I don't exactly remember what the FCX news was. I think they had a mine collapse, but they had like 50 mines, I think.
No, it was guidance. They issued guidance for quarter 3 in advance for some reason.
Oh, is that what it was? I thought they had something
Yeah.
that happened at one of their mines. Yeah,
No,
see,
it was weird. They like guided down for gold sales in quarter or gold mining in quarter 3, but it didn't make sense because gold was ripping hard.
absolutely flying. Yeah,
Yeah, it didn't
absolutely.
make sense.
Oh, okay, there you go. I thought that it had something with one of its mines. It must be thinking of something else.
Hey,
But
River, that is one of them. That was one of them. I remember.
Oh,
oh,
okay.
was
Maybe it
that
was like
nice?
back to back then. Maybe
I think
Yeah,
they both
of
happened.
course they love to
Yeah,
stack them on you,
yeah. Maybe it was
But
both.
yeah,
yeah,
Yeah.
I think they
but
might
I
have been
really
two
like what
different
Toastie's saying.
currencies.
Know some things. You don't need to get super hung up in it. You don't need to do this like insane dive into fundamental analysis. If you're trying to be, a long-term investment, like you want to be in here forever, maybe like a Boeing, something that's absolutely demolished but isn't going anywhere, you can start to dig in and understand this trade could hurt for a while. But you're trading the fundamentals on a big company long term. But as a whole, we've seen it. Look at these people that have been shorting Nvidia for a $1,500 run or whatever that thing went on because it's running too fast. It's overvalued when in reality Nvidia is and has been undervalued, technically speaking. You know, be careful worrying too much about those types of fundamentals. I mean, the guy who I'm forgetting his name right now, but the guy who wrote, they call it the Bible of Technical Analysis. He even said, and this was back in the 90s, the days of being a strictly fundamental trader are dead. Use your charts to support your fundamental thesis and trade it. Jobs reports, inflation, GDP. So generally speaking, they're just an event. Let it happen and trade afterwards. You will
What I was
tip.
going to say about those two, and
Yeah.
River loves to make fun of me for this, but those are things for me, honestly, I couldn't care any more or any less about any of that, honestly. Like,
Toasty hasn't looked at an inflation print in 4 years,
well, no, that's not true. I'll pay attention to CPI, but jobs and all that, fundamentally, I'm no genius and I'm probably the dumbest one in the room tonight. Um, and there's so many people sitting at desks all day who are going to have higher level modeling, who can drive conclusions off of those headlines so much quicker than I ever could. So all I'm going to do is trade the reaction off of that, whatever that might be, or if I'm already in a position, hopefully I have a cushion going into something like that. And I'm going to trade the chart in front of me. I'm not going to freak out about whatever that headline might be, connecting this to trading psychology. Frankly, I'm too dumb to really make my own conclusions on, if jobs are a little hotter than normal or a little cooler than normal. For the most part, it's not going to matter much to me.
Yeah.
I'm just going to trade the chart in front of me, and if the market reacts negatively, maybe there's a case to be made for an overreaction. But if the market reacts in my favor, I'm going to keep rolling with the punches. And maybe that's ignorant of me to say, and maybe it's not.
Well,
But
dude, honestly, this market is a perfect example right now. So we had our little, we had our tariff mayhem, which obviously, was resulted in nothing, and so the market kept buying on it. This is a market that has rallied for 6 months straight on increasing inflation, weakest job market since like the dot-com bubble, the most overvalued market since the dot-com bubble. You know, there's a million reasons to be short on this market. It doesn't matter. It's a bull market. So you stay buying dips. So is Toasty right or wrong for not caring too much about those? He's not wrong, in my opinion. This chart right here it shows us two things. One, the stock market does not represent the economy, never has, never will. And then the data matters. It'll give you your initial reaction. Trade the market up. The market is going up, so trade the market up. If you don't like trading short or understanding that we're in a bull market, so short trades should be scalps or day trades, not swings, wait for those dips and buy those dips. So I won't say Toastie's wrong by ignoring it, because if you look at this chart, it was much easier to be long. If you didn't know what was going on in the economy. You guys have known me, like, I mean, I've struggled to stay long and strong because it doesn't make sense to me. Maybe I know a little bit too much, because the rally doesn't really make sense. Of course, we know the rally is AI, it's rate cuts and AI. That's why the market is rallying, but it's ignoring everything else. So is Toasty wrong for ignoring that stuff? No, because the market is also ignoring it.
I
I
just
was
want
actually
to.
gonna say I don't hate what he said at all. Um, one of my big this guy who's in a similar position as kind of us. I know him really well. I've known him for years. He has an audience. He alerts to his like little Patreon and Discord, and I mean we're buddies, and I've been seeing him say for maybe the past 4 months, like we're gonna avoid swing trades because of the market volatility or this report, this headline, this, and throughout that time, like, I mean, I've been printing. So in my eyes, I was like, bro, I think people are getting a little. Some people just deep a little too much, and they're a little too caught up, and maybe we are in a headline market. But there's gonna be something every week, and sometimes you just gotta trade what you see and trade what happens in front of you.
Right. I wanted to share my screen really quick,
Hey,
if that's okay, River, and just kind of show
I have
the
a
group some of the things that I've been tracking in terms of the short term.
Mhm.
Yeah, I mean, I don't know how to do I have to stop sharing?
Let's see,
River,
let's find out.
River, wouldn't you look at PE
One sec, Norman. We'll
at
come back.
all-time highs?
We'll come back, Norman. We'll come back to you. We're almost there. We're almost there. Um, Connecting this back to trading psychology, and the reason that I respond to this question in the first place is because for me personally, I'm somebody who trusts my opinion probably significantly less than Shark and River do, and probably even 1K, in the sense that these guys can look into some of these headlines and develop their own conclusions. Where for me, I generally just follow price, and that's how I manage my own trading psychology. Is I focus strictly on price, and that's the end of it. When if the market gaps up or gaps down, I'm not the person who's like, what is the news or what happened. I really couldn't care, because if there is something, I'll know about it. And you can kind of see some of the headlines that I've highlighted on my own chart over the last almost a year long period. And it's really things that have caused significant swings. The first time tariffs were announced in North America, the Liberation Day tariffs, then when tariffs were paused, a deal with China was announced. From there, pretty quiet. We start to hear about some rate cuts at Jackson Hole, a little bit heavier in terms of significant things. We get the government shutdown, 100% tariffs on China, the government reopening, and then the big one with NVIDIA's double beat and raise on bottom line, top line, and then increased guidance. So for me, this is all I've really cared about in terms of major market moving headlines over the last year. And from what I've been seeing, there's been nothing to really freak out too much about. Tariffs, that was a pretty obvious one. We've seen how the market has reacted in the past on tariffs. there's history to go off of there. And when any bear market begins, we always know the only time it ends is when that begins to show some kind of resolution. But anyway, I don't want to get too pigeonholed down this topic. I just kind of wanted to share this piece. River, feel free to take the share back over there.
Tostie, why'd you mark that 10% level, the 620.73?
Oh man. How far do we want to deviate from the topic of this lecture, River? Because this question is gonna take things sideways
If
a little
that's
bit.
okay.
No, I mean I'm fine with it personally. Where did River even go? Is he even still here?
It's probably smoking something.
Yeah, I don't even know what happened to him, to be honest. I wonder, did me sharing kick him out? That would suck.
I think he's still here.
I don't know. Well, I'll answer the question in the meantime, and I'll try and figure that out in the background. Why did I mark that 10% level? That's a great question. This is actually something that I learned from River. Every time the market pulls back, it's it's almost uncanny, the ability for the market to bounce or show some kind of support at 10% correction level, 20% bear market level. I mean, without fail, basically every single pullback, that same sort of thing has happened. If we look at the bottom here, I believe this 481 right around here. I mean, if we look from top to bottom, 20% pullback was literally right here. And this is approximate, but that was a 20% pullback bear market threshold. So 10% is that kind of technical correction level where if the market pulls back 10%, we're basically officially in a correction. Market pulls back 20, we're officially in a bear market. So I didn't know what was going to happen. And I'm a person who, when we see kind of some price action like this, where we see these two big distribution days, I'm going to start looking to both scenarios. And that's what I messaged in my tab. I don't know what's going to happen. I don't know if the market's going to bottom at 650. I don't know if it's going to be at 620 or 600. But I'm going to prepare for both scenarios and kind of sit back and wait for price to give us more information. And part of me preparing was getting some of these levels ready on the chart. So on the S&P, I dropped it on there. On the Qs, I have it on there. Let's see, ARK, I should have it on there.
And
BTC as well.
your
IBIT,
gray line is the 200 SMA?
that's correct. Yeah, white line's 50, gray is 200.
Okay, thanks for that explanation.
Yeah, you're welcome. And good question too. And let me see if I can figure out what happened to River. We could probably take some more questions in the meantime. Where are you?
Dude, you
What the hell
kicked me
happened?
out, dude.
Dude, I did.
Yeah,
I was worried about that, dude. I don't know how that happened. Is it
it,
because I shared?
it kicked me out, dude.
I'm sorry, dude. I had no idea.
Why is that your screen name? What the heck?
Poopy face?
I'm sorry, dude. I didn't mean to kick you out. I don't even know how I did that.
I don't know either, dude.
I apologize.
Hey, hey, River, I have a question if you don't mind.
Yeah, of
For the
course.
I have a question for the shark. Since you are buying these, digital asset treasury companies, which are like probably deep in the water, pretty much every one of them, the it treasury, which is Tom Lee, ticker BMNR. I know you have bought some, and you are kind of bullish on BMNR, but there are other treasuries as well, like Solana treasuries, which is the forward industry, and UPEXI, DFDV. So, like, what is your opinion coming up with that? Because those companies ran like what we did or what we saw in 2021. So many tickers, small caps, or some sentimental tickers that ran and then they went to bankrupt, or they disappeared like an angel. So, what is your opinion on those things?
Well, I'm not sure that was a question for me or Shark. Um, I don't like them. BMNR, SBET, I don't like them at all. I think they see strategy pulling the sickest Ponzi scheme of all time, and they want a piece of the pie. So for me, I'm not that into them. Shark knows a lot more about the inner workings and the money they get from renting out their ETH and all of that stuff. So he understands what they're actually doing more than I do. I don't like them because they feel pretty scammy to me. Market apparently thinks they're scammy as well based on the selling. With BMNR, I will say I love Tom Lee. I think Tom Lee is deep down a genius. Obviously, his bullishness gets in the way quite a bit. The one thing we know about Tom Lee, he's 2 years early. Like that is That is the facts of him. He is always, always, always too early. He is ultimately always right. However, he is always too early. And so long term, they're probably going to do something. BMNR is likely the one I would stick with because of its attachment to Tom Lee. However, they scare me. They do scare me. They feel like a Ponzi. Oh, sick. Toastie's giving me a wine. Toastie's giving me dude, but they want a piece of the Ponzi pie, dude. They do, you know? And so to me, that's my problem with them. I also think that, and I always talk about this for investors. It's the same as gold, it's the same as silver, it's the same as all of those. Most investors want exposure to the commodity, whatever it is. It's why we always see, have gold miners put in a great run? Yes, it's been terrible compared to gold, the commodity, because you're better off owning it. You can own a gold miner, and great, gold prices are $4,000 an ounce or whatever it is. However, if they had to spend 2 grand to get that, all of a sudden their profit is getting hit. So that is why, generally speaking, the commodities will always outperform the miners or whatever they are. Like I said, I do know that these weird treasury things are getting like they're getting money coming in supposedly, but for now we can tell the market hates them. So until the market decides they like them, I steer clear.
And one of my favorite things about the way River trades and his mindset on the market is if you hop on Twitter or any of your platforms, you will see BMNR to 150, 200, all these posts. And River's so not afraid to stand there and say, this isn't for me. I don't understand it. Why would I trade it?
Yeah.
And to be completely honest, I mean, he's been right way more times than not when he has that thought process. And I mean, that should be how everyone kind of goes about these things. Obviously, I kind of gave my little crypto thesis, and probably candidly, last week I picked up a little over 3,000 shares of BMNR under 30 because I still I I like the stock. I mean, I can go into it'd be a little bit too deep of a conversation for a trading psych lecture on why I feel confident sizing into that position and putting that risk on it. I like Tom Lee a lot as well, and just with for how successful some of these Bitcoin treasuries, if you're the number one leader in that space, did. Ethereum is a yield bearing asset, so they should trade with a premium to their MNAV, and it's one of those things where if you don't believe in it or you don't love crypto and you see these names, there's really no reason to be in it. Me personally, I'm still bullish on it for at least the next few months. I know the little Tomlin's going over that liquidation event that occurred, and it's a bit unlucky because I kind of it's one of those situations where I was a little bit too early with my initial thought process of it. But it's one of those where we just talked about the drawdowns. And I looked at BMNR last week, and I was thinking I still like the stock a lot. That doesn't change my long term thesis. So if you are in it or you have questions about it, I'm pretty sized into BMNR at this time, and I could talk you through my plan and my strategies. But like I said, if you're not, everyone should be like River and just say, like, why would I trade it? Like, I don't like it. And by doing so, he probably saved himself a lot of money where people are underwater.
This is one of the only times that River and I actually do kind of agree where I've never really understood crypto. I don't personally, again, and maybe this is a hot take and maybe it's not. Um, I just don't really see it being useful for any reason. Like I don't see the fundamental value. And outside of, Bitcoin being adopted by major institutions and all the ETFs and related companies, Bitcoin mining is unprofitable at this point, based on the price of BTC. It costs like 100 grand to mine a Bitcoin, and BTC's, 85K. I've never been a crypto guy and continue to not be. So I don't know. Maybe
Other than
that's just,
Fartcoin, I do think Fartcoin is an excellent store of value. But I think crypto is the future. I'm just not
oh,
I'm just not convinced it's any of them that we have. It's, you got to compare Bitcoin to gold to a certain extent because who's walking into a store and spending gold? You don't. You hold it. That's how Bitcoin works. Who's spending Bitcoin? Like if you're spending it, stop. Hold it. It is to make money on. It is to be an investment on. And so I don't think that, like I just don't see the ones that we have currently being the future. I some of those cheapies that might be, accepted by banks or XRPs, things like that. Those ones make more sense to me. But Bitcoin it's basically a store of value. And why, albeit an extremely volatile store of value, but why would you go spend it? Why would you do those things? That's where my issue with it is that, hold it. Like I am bullish. You have to be bullish on it. And I do think like, let's be real. Like let's be real, Toasty. I got you swinging long crypto right now because crypto
Oh, we're up. We're up.
and we're up. Exactly. So we're swinging long right now because I'm bullish on it. And there's times like you guys, let's be real here. There's nothing more classic America for the last 5 years than a Thanksgiving Bitcoin rally. So you long Mara this week, right? I mean, I did. Toasty did because of me. 1K did because of me. So I'm bullish on it. But like I'm not bullish on the ones that I like, and I don't understand any of it. Like I'll just level with you guys. Like anybody who's ever seen me in the crypto tab knows that. Like I just trade the charts. Like I don't care about your stores of value. I don't care about your use cases. I don't care about work over whatever they say. None of that matters to me. I'll trade the charts, and it's easy to be bullish on that stuff longer term.
Yeah, the thing I'll add on crypto and the other thing I'll mention on your play is honestly, River, you could have told me to long anything with next week contracts and I would have bought it because you never tell me to buy anything. So it didn't really matter what the ticker was. I was going to buy it anyway. Um, and as far as crypto goes, the reason I personally stay away from it, number one, is a lack of understanding. I don't understand it, and that's fine. It just not for me. And I guess on top of that, I just personally find it easier to trade stocks over crypto. And that's my personal opinion. Crypto can be super technical, but sometimes it can't. On the times when it just dumps 50% in 30 minutes and nobody really knows why. And it's like, yeah, I don't know about all that. Um, and the leverage in it too, it's just like it's not my cup of tea. But anyway, that's my own personal opinion.
100x leverage, Toasty.
Well, yeah, I was doing
How
125 on the
many does have
Bitcoin
a
and then
granny ETF?
what's that, Norvin? We can answer your question now.
You know how they were asking about BMNR? Tom Lee has an ETF called Granny,
Yeah,
GRNY.
granny shots. Yeah, dude, I'm all about granny. I love the small cap exposure too.
So new, bro. It's so new. It has everything.
But then you can even pull up that GRNY one. Yeah, pull up GRNY. Okay, so look at
You
Tom
just buy
Lee.
what? You buy
Look at,
$30 leaps for 2027?
no, but look at Tom Lee being early. The dude releases his small cap ETF and months later is down 40% or 30% or whatever it is. Like this is Tom Lee in a chart. The guy's always early. He tends to be right long term, but here is Tom Lee in a chart. I mean, it's the same as you can go back to December last year, 2024. And I know we've had a lot of changes in the last year, but you can go back to December 2024 where Tom Lee is on CNBC every single day and this was like Thanksgiving last year and he is calling for a 20% rally on small caps into year end. So from the day, and so his fund went long IWM at 235. Some last Thanksgiving or whatever it was. It was the top. I mean, IWM, and don't get me wrong, I know that it was all the tariff stuff and all that caused it, but they got long about 235, 240, and 4 months later it was trading at 170. I mean, that's classic Tom Lee. He's always ends up being right, but is always early. I mean, they're fine. They're green on their IWM now. Good for them. It took them all year, but I love the guy. I love the guy.
The classic trade floor trade up 3% and celebrating after a 40% drawdown.
Yes, exactly.
Going back to the question I was gonna ask earlier about you were saying that you don't look at PE ratios because
Oh yeah, sure.
obviously they don't matter right now because we're in a momentum market. Wouldn't you want to look at that when we're at all-time highs and like for example, let's say we start selling off by next year, starting next year, like that company you keep on talking about. And I know you're sending shots to Anthony because he's the one that bought it around that price. those are the companies that actually going to be hurt the most because they're not generating any cash. They're so early to this, and then like you said, they had a deal, but the building is not even built yet.
Well, yeah, and so Norvin, I look at PE ratios all the time. I talk about them all the time, but you just can't trade around them because, if these like blown out PE ratios mattered, all of the big names would not be trading where they are. So it's your major names, it's your market movers, it's any of your banks, it's any of your Apples, Amazons, Microsofts, Nvidias, Googles, likely Berkshire Hathaway, all of those huge names that have Tesla, super blown out PE ratios. Like, let's be real here, you guys. Tesla's a car company, it's a $50 stock, but it's not. Like you guys know, and I'm not even a Tesla hater. I am a long-term Elon hater, and I've been dead wrong for 7 years straight. I will be the first person to tell you I hate it and I short it at any opportunity. And I will also be the first person to tell you Tesla is going to keep going up forever. Like, I'm bearish. I'm not dumb, but you just have to be cautious trying to trade around a PE ratio. Like I said, if they mattered, Apple would be way lower, Microsoft, Amazon,
Yeah, well, obviously
PLT.
those companies, they're trillion-dollar companies. They hang out and drink cocktails and buy each other's stock.
Well, yeah, but I mean, even look
Um,
at Nvidia, and I mean, technically speaking, based on forward Ps and stuff like that, it is undervalued, but it's making
Yep.
50 billion a quarter, which is mind blowing. It's valued at $4 trillion. So that's, a little bit, it's
Yeah,
like,
One thing to note too, Norvin, is there's a really big difference from saying fundamentals don't matter and there's a difference between saying fundamentals don't matter and fundamentals don't matter to 99.9% of us. And the reason that I say that is because, like I mentioned earlier, just like anything in trading, right, there's going to be a whole host of firms with proprietary algorithms and inside information and data that is far superior than anything that we could possibly access or come up with on our own, right? So those real fundamental winners are going to be discovered by names or by funds that, are going to be in there way before we even know about the ticker. And that's just the reality of the market, right? These people are professional traders, firms with hundreds of millions, billions of dollars assets under management. This is what they do. This is what they live and breathe. And in my opinion, it's our job to react to institutions buying those sorts of names by understanding names with high volume at lows and bases and that sort of thing. I will say though that 0.01% of the time that fundamentals matter, they can make for incredibly, incredibly fascinating trades. And I guess I shouldn't say fundamentals matter. That's little. That's probably an exaggeration. But the reason I brought up this T chart, and this is a really fun trade that River and I took almost 2 years ago now, or 3 years ago, maybe. Yeah, I guess 3 years ago, was this trade on T. Again, River's favorite stock, and I really loved it at this time as well. And there's a really clear, incredibly important technical level. I mean, I've said it so many times in lecture, I'll say it again, but this is support and resistance going all the way back to 1995, support in 03, and then, real close to demand in 08, 09. And then we revisited this level, right? So automatically it's going to be a real important technical level. And the fascinating part about this specific point in the chart at this point in time, this was a level that represented AT&T's book value, I believe, right, River? Was it book value or value in cash
trading
holdings?
below book. It was like
Yeah,
0.9
yeah,
PE ratio.
yeah. Okay, I couldn't remember which one it was, if it was book or cash. But yeah, so AT&T, based on fundamentals alone, was literally trading under what it would be worth if you sold everything that they owned that day. Now, obviously, you're not going to be able to get the cash value of a company, but it's a company, AT&T. It's not going anywhere anytime soon. And when a company is trading at a level that severely undervalued, with the prominence of something like AT&T, it's probably a good reason to be involved alongside. So I
Yep.
know I maybe
And I love
over-exaggerated a
that.
little.
And just to add on to that, Toasty, so I think it was Murphy, he's stock guy, he's a genius. He said two things. When you're looking, and he's a big tech godfather of technical analysis. He said, don't tell me that a stock is overvalued. Tell me when an overvalued stock is a buy, and tell me when an undervalued stock is a buy. We don't
Mhm.
care about any of that in between. We care about the fundamentals do not support how low this stock is. AT&T, prime example of that, great PB ratio, shedding debt like nobody's business, did massive investment in themselves, and trading that low, that is a buy 100% of the time. Another one on the other side of it is Nvidia. Is it by some metrics overvalued, and has it been for 3 years straight? That doesn't matter. You buy because sure, maybe it's overvalued, maybe it has these wild predictions. They're all backed up, so you buy. So don't let these, blown out PE ratios, none of that affect you day to day. Look for undervalued stocks that the fundamentals do not support what they're trading at on the low end. And then when we're trading these names, your Nvidias, your Apples, your Googles, your Amazons, all of these, are they overvalued by some metrics? Yes, but I can give you a million reasons to buy all of them. So that's what you more need to care about. We don't,
So you're kind of saying like look at companies that are like trading at book value because it happened to me and I missed a whole run up on CLS. Beginning of the year it was trading at book value and obviously they had 27% return by I think it's until 2027. They're gonna keep on giving those good reports because
yeah,
the demand is obviously there, but yeah.
yeah, and you can find that value
whole
all over. You can find, and you'll see it in sectors because the market is so cyclical, and so yeah, you're going to see that in things like your CVS's. Pfizer, I bet it's trading like a 1.5 PB, those healthcare names are torched. Merck's another one. I mean, it's doing better, but they're trading close to their book value, so their value's worth buying. That doesn't mean that they're going to run. I even see Luis has a question right here. Explain a value trap. Nike, the value's there. It's been there. Like that is the perfect example. It's there. It's been there. Yes, that, secondhand shoe market is dying and people aren't buying Nikes like they were. That's more showing a weaker consumer than anything else. But
Damn.
it's a value trap, and it is easy to say it's a value trap now
That,
because it has been one for years. We've all, as I
that's
said,
actually
I've
the
tried to
reason I
catch
was asking you about Nike, River, because obviously it's been
yeah, and I answered your question, Norman.
bad,
It's not a buy. I mean, you can
Even if I
try.
buy time, like let's say I buy a May $70 call for next year.
Well, what if you bought $100 call in January? You're wrecked, or 130 call in February. You're wrecked. Look it doesn't matter. Look,
Oh, balance.
it doesn't matter when you bought Leaps anytime since 2023, you're wrecked. So it's not always going to work, and so Nike is the prime example of a value trap. Fidel, I've seen your question a few times. I don't use a scanner. I doubt 1K uses a scan. He has, a little watch list that he watches. Find things and trade them. Oh yeah, 1K is answering you right now. Find 10 stocks you like to trade and trade them. That was kind of what I was talking about earlier, where Tostie, he'll go find unique things in the market. I won't. I watch Apple, Amazon, Microsoft, Nvidia, SPY, QQQ, AT&T, Coca-Cola. That's basically it. I mean, a couple randoms here and there, I got 2 spots for randoms left over. But no, there's no reason to do a watch list. We see it all the time. We got people in OT looking at like we got people long 10 different like random names right now, wrecked on all of them, just trying to trade to end up, break even if they can. And so that's, we like don't go looking for a bunch of things. You will die.
And to that point, River, I'm sharing my screen. These are all the names on my watch list, and 2 of these names are really just here as a joke. I was mostly just curious to see what they were going to do, but wasn't really going to trade them. But I got 6 names on my watch list for real. And I sent this message in my tab, and I'll just kind of rehash it a little bit. And again, we're totally deviated from trading psychology at this point, River. So sorry.
Who
We're
cares?
way,
Yeah.
way far off. But what the message that I sent, and I know River agrees with me here, is that when the market starts having behavior like this, where we're losing some of the moving averages, it really starts to expose where the cracks are in the market. And for example, a lot of the high flyers that I'm used to trading, EOSE, AMPX, NBIS, all these shitcodes fundamentally, got absolutely torched. I mean, NBIS is down probably almost 60, no, 40%. And these names that are pre-revenue, losing money on a quarterly basis, are going to get absolutely hit hard once the market turns over. And for me, my main goal when the market pulls back is identifying names that hold up better than the rest. Because I'm still the type of person that likes to trade market leaders. I guess you could call it. I pay the premium for confirmation that the name is going to be, high quality. And that's why my watch list looks the way it does. A lot of you probably realize, or maybe don't, but these are the highest quality names in the highest quality sectors in the market today. Google, I think everybody knows this one is the strongest name out of the Mag 7 and probably all of mega cap tech. WDC data storage, those of you who are computer nerds probably realize that your RAM has gotten significantly more expensive. So I got a couple data storage related names, Micron, SanDisk, and then optical names, right? And these are all kind of thematic around data centers, which is the theme really driving the market higher as a whole. And that's where I'm involved. And love it or hate it, right? These are some of the names that have held up the best in this pullback. This name here that I'm currently involved with pulled back 20%, which, sounds pretty horrible. But Q's almost did 10%. So it's really just double that, which really isn't the worst thing ever when you put it into perspective of names like the real shit companies doing no revenue, RGTI down something like 60, 70%. So that's what I focus on in pullbacks, and kind of answers the question related to how I maintain my own watch list. There's 6 names on the watch list. These 2 names I literally just put here so I could have it easy to look at how MMA is doing on NBIS, and I was kind of interested to see what the King of Shitcoins was doing over the next couple of weeks. But that's my watch list, right? It's really simple, but that's how I manage it.
Yeah, and I think that's like the most important thing because people like, I mean, they go looking to be in, 20 different trades.
You'd
When
like this one too, River. Highest volume ever, well, at least recently on Sienna. Great earnings, they make money. Great guidance recently. This one's actually got some quality.
Remember the one that your friend said, IBM?
I said IBM. I mean, that was me. I said IBM. Where were we telling? I think 230. I was telling people to buy that one. You can go back and find my lectures from a few months ago
Dude,
IBM
IBM, I
looks good.
think it has like a Google type of run. It's gonna have a Google type of run.
because it's going to make a chip that competes with NVIDIA. You got to start living. You got to start living in reality, Norvin. I mean, dude, you really, really got to like ditch your wild harebrained ideas and just trade
Oh my
some
God.
like draw that lower trend Toasty from June lows 162, connect it to your wick up there at on April 7th, and now easily understand why the buy was at 230, 235, 240. No brainer. Hammered, low risk, beautiful trade, take it right off the trend, run it up. Nobody cares about it's going to make a Google run after it ran from 230 to 320. Care about it when it's cheap. Don't care about it after the run, Norvin. That's where your big problems run into is you always go, hey, River, check out this stock that's up 700%. I don't care about those. NBIS is the one, and I give you credit for it all the time. Tell Norvin to buy break 41.84. I still have the circle on there. That's where I told you to long NBIS because it made sense down there. And then, as I said, really no interest in NBIS until this week when it finally pulled back to 85. I
This is one
got
of
my
my
river,
favorites.
my river buy line is at 85 on NBIS, and so go looking for value. Nobody cares about, like I know that people love to just jump on their like Robinhood largest movers and say, look at this stock, but don't, find stocks that are a buy. Don't find stocks that have already run. All of these shit codes are the greatest examples ever. Another one I know people love, Cipher, CIFR. Maybe it's great. I don't know. It was down 50% in 2 weeks. So to me, there is some questions for that company that apparently people don't think it's a good thing. And maybe it's not 50%. I made that up. But
No, it was.
yeah, but that's a great example of one that's just absolutely wrecked. Another one everybody talks about, again, I know nothing about it. Zeta, ZETA. All I know is it's dropped 50%. At one point it was down a lot more, probably almost 75%. I got no interest in a stock like that. Let them start proving themselves. Maybe we get back down there to that 10 and it's a buy. I got no interest here. means nothing to me. I don't care about the increases in volume. I don't care about any of that. I view this as a not good company until it proves itself. Again, I have no idea what it does. I'm basing my opinion of the company on the chart because the chart is telling me most people do not like it. That's all I can, that's all I can gather from those kinds of things. So you find value, you find an IBM at 230, you find an NBIS at 85, you buy at places where the market tells you to buy. I mean, one of my greatest calls ever was Hood trading at 38, 39, and I'm telling Tostie and MMA to wait for 32, and they are telling me I don't have a
No, it was
brain.
at 45 and you were saying that.
Yeah, and they're telling me I don't have a brain between my ears, and we are trading 32 not 5 days later, And so buy when the market tells you to buy, or the market gives you a reason to buy. Don't, don't go chasing the big movers. Like Crashmas, when he told us to buy ASTS at 100, he lied to all of us.
Whoa, whoa, whoa! Hold on.
No, I'm
I,
kidding.
I don't know.
Crashmas told us to buy at 24 before it ran to 102.
Yeah, they love issuing debt. That's their problem.
Dude, I still can't believe I didn't take that buy at 35. Talked about it.
No, no, Toasty. That's not their problem. That's their superpower, brother.
Dude, Testy, I have my circle on my chart is on 9-9, and that was the day where I said I'm not ready to buy it just yet. Gonna give it a couple more days.
That's disgusting.
Yeah. Raphael and Crash bought it. Then they sold it at
That
like,
reclaim would have been nice though, prior highs, but anyway.
then they
In
sold it at 40.
hindsight, that's the biggest fumble I think of my life.
Oh,
Not holding those. I wouldn't have caught the whole move on it, but we would have caught like the good initial move up to like 60 with the
yeah.
time we had on them.
Yeah, I know that was a rough one. Well,
Now I'm
guys,
starting
I
looking
got to
at it
call it a
better.
night too. I got to call it a night. This was super fun though. We should do these more often.
That's what I was thinking, dude. Once we got so far off the topic and felt like we could go for another couple hours and we were already at an hour, I was like, yeah, that just means we need to do these more.
Yep. Okay. Well, thank you, everybody. Make sure you tell Shark thanks. Don't tell Toasty thanks or anything, but make sure
No.
you tell Shark thanks. Tell 1K or sorry that we never shut up and didn't let him talk. And thank you all for being here. And we will catch you guys later.
And happy Thanksgiving.
Yep.
And thanks to River for organizing this all. This was great.
Have a
Appreciate it,
great
dude.
one, everybody. We'll talk to you soon.
See ya.